Hey everyone, this is Kirk here again at Option Alpha. It is January 6th, Thursday, and just wanted to do a quick trading video here and kind of go over where the market is before the end of the week. So it's the first week of the new year. Overall, it's been pretty bullish. The last couple of days have been a little bit tough for the indexes to continue and have the follow through that Monday really had. But generally, it's been bullish. Everything I kind of read is bullish as usual. And, me being the contrarian that I am, I think that, it's setting up to be a prime opportunity for the market to just have a slight pullback again. Nothing major. But again, when everyone else has bought into the rally, who else is there left to buy? When 99.9% of people are bullish, who else is there left to buy? So I think that with the investor sentiment levels that they're at, all the indicators. I mean, I could go through every indicator on this chart here, and the MACD, stochastics, RSI, acceleration bands, Bollinger Bands, everything is overbought. Now, of course, it doesn't mean it can't continue on in perpetuity, but it definitely gives you something to think about as far as risk reward. But I wanted to start tonight's video with a look at just a couple things I want to go over that I think are kind of interesting. OIH is the first one that I have up here on the chart. It's been following this trend line here for the last 2 years, call it now. Pretty consistent trend line, a very, very safe trade that we could have here. Oil's had a hell of a run up over the last couple of months. I think that there's a little bit of pullback left in oil, but I don't know how much is left. I know that, with all the growth expectations that they're pricing in these days, it's not impossible for oil to get up near the $100, $95 barrel region very, very quickly. Now, I know it's had a rough patch these last couple of days, but I don't see oil really dropping dramatically from here. So I think if you're going to want to make an oil trade, just wait for a little pullback here and then get in long with some options if you want to try it that way. As far as the dollar is concerned, I think the dollar's been pretty interesting the last couple of days. You can see 2010 or 2011 has been a really good year for the dollar. Every single day, the dollar's been rallying, so that's good. The euro's been falling against this pair, mainly because of, I guess, more fears coming out of the European region. But I think that it's pretty safe to say the euro is once again at a pretty safe support level. Again, you can see it's at this Fibonacci support level here in blue. So we could see a slight bounce in the euro here, which would weaken the dollar and make that trade, I guess, a real good risk-reward trade for the short-term trader. I think when we look at things like the NASDAQ and the Indu and some other of the big charts, I think what people fail to really realize, and I was actually talking about this the other night with one of my coaching students, is that we've come almost full circle on the NASDAQ and a bunch of the other ones, the RUT in particular. Here's the high of 2007, and we're really close to coming right back up there. Now, you got to ask yourself if you think that everything that's happened over the last 3 years enables us to get back up here. I mean, debt levels are huge. Municipal bond area is not a real good area to be in right now. So it's just something, food for thought, I guess, as far as where we are. If we do see a pullback in most of the major indexes, which I think is going to happen. I mean, historically, the beginning of January has been pretty good, but the end of January has been pretty crappy if you look back in history. So if we do get a pullback on the indexes, I think that the recent top that we had across the board, so you have to look at every index differently, but right here in the beginning of November, where it kind of topped out before this last dip, is where I think the markets will pull back to. So on the NASDAQ, that'd be right just below 2,600. Again, not a major pullback, but it could happen over the course of 3 or 4 days and erase practically a month and a half worth of gains. So it is going to be pretty sharp and significant when it does come. Now, the last thing I want to talk to you guys tonight about is TBT, and I had a lot of thought put into this over the weekend and over this last week. Had a really good session with another one of my coaching students. which has actually become more of a soundboard for each of us, which is really great. And I really like the fact that coaching is becoming more of a soundboard for everyone, and just another great way to meet other traders and options traders out there in the market. And I think what I've wanted to do for a long time is enter TBT long. And what I chose to do instead of actually going out and buying the shares of TBT, which is the ultra short 20-year plus treasury bonds ETF. And everyone knows that I'm pretty bearish on bonds. I think there's no doubt that over the next 5 to 6 years, short bonds is going to be one of the best trades that you can have. But instead of going long the actual ETF, what I decided to do instead is take a very, very far out option position. Now, this is pretty contrary to what I like to do on a month-to-month basis with option selling and credit spreads and iron condors. But what I like about this trade is that I actually traded the 55 strike calls for January of 2012. So I have a whole year in front of me, and the time decay is very, very minimal at this point. So for all intensive purposes, it's pretty much a long trade on the TBT. So with a very small theta or time decay, I have good delta. It's not too overpriced. And so if TBT does start to rally here, then I'll get some good premium that'll be coming into the options. And of course, if we have a big collapse in the bond market this year, which I know that a lot of people have been kind of looking for and watching out for, then these things will profit immensely. Not only that, but it was also a lot cheaper to enter a bunch of contracts at 55 than to try to buy a couple thousand shares of TBT and have that money tied up. So that was my big hedge trade this year. I think that that's a real good trade for the coming year. I think that that's a great way to hedge any bond risk that might be in the market, and of course offset some of the losses. So I just wanted to point that out again to you guys tonight. As always, if you have any questions or comments, please email me, and happy trading.